Good morning, guys. Good morning, good morning, good morning. Sound check, vibe check, mic check, anything. Let me know. Let me know everything is good. You guys are seeing me. I think I need more light. Oh, I think I need more light. There we go. How's everything? All right. Trades setting up. I'm going to run through everything with you, but this is dot confirm. Pretty good spread, right? And bullish pull away. Let's try to trade this on a 2060 basis. Let's see if it's going to work. Nope, not quite yet. Not quite there yet. Let's see if this holds up. It does. All right, let's see if this trade holds up. I have a lot to show you, a lot of new stuff, new version of the indicator, kind of like nothing, logic wise, but everything design wise. So we'll see if you guys like it. But take a look. I'm in this. This is a engulfing, a pull away trade as well as a dot confirm trade on the upside. And this is a 520. I'm trading it with a 515. Seeing if we can resolve this trade. All very, very small. I'm gonna show you like different ways you can configure this to whatever structure you like, and you tell me what plays out. There we go. Come on, let's go. There we go. We're done. Okay, so that one gets done. Hi, good morning, everybody. Sound check, mic check. Who wants to know the whole layout? No more PDT from any brokers. Yeah, you're probably right. It's great. Okay. Oops, sorry. Let me see. Keith is writing me something. What? You can take it off, guys. So the legend over here, I'm seeing a lot of people emailing me about the strategy legend, everything else. You don't have to have it on. Okay, all you need to do, if you already know this is for people who want a reference guide to how things trade, and also for people who are watching during live, that I can sort of show them what each thing means. You don't have to have it on. You can just simply go over here. Watch this. Anybody who doesn't want the legend, just say show legend, unclick this, and now it's no longer there, right? So be my guest. If you guys know all the trades, the legend is not there, you can just take it off, okay? You can't make them smaller because that's not something TradingView allows you to do, but you can just take it off. Now I have the legend on here because I want everybody who's watching. You can also, by the way, move it around. Sorry, you can take it off. You can move it around anywhere you want it to go. You can if you want me to put this, by the way, if you want me to put this just to show you, this is bottom left. You can put it bottom right. Just put it bottom right, and it will go over here. And if that's easier for you, that's actually easier right now because of the price action. You want to keep it that way. You can do it that way. You can move everything around, right? Does that make sense to everybody? Do you guys prefer it this way? Is this easier for everybody to watch the legend this way? That's fine. Yes, no? Give me a yes or no. Since you guys had issues, let me know. Good morning. Michael says yes. Peter says yes. So it's totally flexible. Move it around. I think you're probably right. This is probably like a better. Maybe we'll make that a default setting, but you can make it yourself. Just simply save it like this, and you're good to go. But one of the problems we had was when we're trading London, it was just hard to remember which, I mean, I know what they are, but it's very hard to explain which setup is which, what they look like. Hopefully this is a lot more intuitive. Basically, you see white dot, green dot, or purple dot, red dot as a dot confirm. Pull away is simply the neon candle with a green dot, or a magenta candle with a red dot. Green dot hold means that you're not breaking the lows, or breaking the lows, and in the red dot you're not breaking the highs. That's really all it means. And bullish engulfing is yellow again, or blue against the green, or yellow or blue against the red on the bearish side, right? So it just creates lots and lots and lots of interesting opportunities here for you guys. I have a pull away trade that's 3.1% to the good. Let's give it a shot. Let me. I want to trade this with fidelity to the. I'm trading with a 15 instead of 520, but I really want to trade with a 520. So let me just set up my stops and targets, and then I'm going to explain to you how and why you can trade them any way you like, which is so cool. Let me do this 80. Save. All right, this one is. Let's see if this one comes in. Okay, we'll just leave it over here. See how it trades out. It's fine. Okay. Looks good. Cheryl likes it. Michael likes it. Everybody likes the new look. Okay. So here's the thing. Here's the thing about how you could structure your table. Now, the table, by the way, this is not the default setting. The default setting tells you categories. It tells you the category of trades. It's set up by category, right? Grouped by category. If you say this, it will actually show you which, pull away trades and dot confirm trades are the best. These are middle kind of trades. Sorry, this is obviously encroaching a little bit on the engulfing and the bearish as far as the numbers go. Okay, I didn't realize that they kind of encroach. There's just there's so much stuff here that it kind of encroaches. However, what I like to do, since I already know all these setups by group, I want to set this up by edge, and then this is actually fine. And what this tells me, and now edge can be determined in 100 different ways. If you want, right, the table is huge, and you can get rid of it, Ben. I just told you, just get rid of it. You don't like it. It's not meant for you if you don't want to have it. It's meant for people who are new, who don't know all the setups, and want the quick reference at their fingertips. Okay. So there's no such thing as a smaller version because this is all the stuff that's in the table. You can't, the way TradingView does it is they don't let you collapse tables. They're kind of fixed, so they stay this way. Right. Ben said he moved Michael said he moved the hourly to the upper left and legend to the bottom right. Whatever you guys like. They're moving around, or you can just not watch the legend. Do whatever you want. Okay, so here's what I wanted to kind of work out with you. You can set up your stops and targets any way you like. You can make even money. You can make highly negative skew. You can make kind of a mildly negative skew. a lot depends on how you want to trade the rest of the trade. Like if you're trading like this with a very, very negative skew, right? What this basically tells you is that, let me just make sure I get this right. Yeah, so in like, let's take a setup like this, which is, 83, really 84% accurate. That tells you 84% accurate, right? If something is 84% accurate, the risk of it being wrong twice in a row is 3 out of 100. Now, it doesn't mean it's not, that's not going to happen, but it's a pretty rare risk. So if you're looking to, I'm going to take small, consistent profits, and when the trade goes against me, I'm going to repair it. With a a second entry on a bet that second consecutive entry is only going to be wrong 3 out of 100 times. So it means I'm going to repair it with high degree of confidence that it's, that I'm going to get them, repair it and then keep going. That's one way of trading. So you're basically trying to win 8 out of 10 trades, and the other 2 you're trying to repair. And if all goes well, then basically you're +8 for the day. Let's say you do 10 trades on a basic, on a basic notion, right? That's one way of trading. If you want to do sort of like, the key to that is you have to trade very small, because you can't do large size to repair, because then if you're wrong on that large size repair, you literally blow the account. But that's a small, steady, consistent way of trading the edge. The other way you can trade the edge, and this is actually really surprised me. I didn't realize that you could the edges were there. Is you could trade it with even money. You could literally trade it. Just to give you an example, 5 and 5, right? You're going to trade 5 target, 5 stop. This is even money, and this is actually a supremely good edge. This is 14 points above what do you call it? Break even, right? Which is really, 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 really strong. So this is a bullish engulfing. And let's say, you trade that. But obviously, even with this thing, you're going to be wrong 1 out of 3 times, right? Because it's a 2 out of 3 type of trade. So in the other case, you're going to be wrong only 1 out of 5 times. Here, you're going to be wrong 1 out of 3 times. But the edges are actually much better. So, like, for example, let's try to trade even edge, which is really, really surprising to me. I find it hard to believe that that's going to be such a big edge. But let's give it a shot, because that's what the data says, and we can certainly trade it that way. I'm going to set up a 5 and 5 stop. I zero fucking chance this is going to work, but I'll give it a shot. The advantage of that is, so when you're like this, and it's basically 35 against, right? So 0.35, that's 0.35. Basically 1 out of 12 times. No, sorry. No one. It's 1/4. So minus 100. No. Sorry, let me just figure this out. It's 30.35 times 0.35 minus 1. Yeah. So 13% of the time, you're going to get stopped out. Remember, 13 out of 100, you'll get stopped out twice. But it's such a small stop out that you can even go to the 3rd time, and your risk, let's say 3 times in a row, 0.35 times 0.35 minus 0.35, becomes 4 out of 100. So in the very, very negative skew, 5 up, 20 down, your second resolution fails 3 out of 100 times. in an even skew, your third resolution fails 4 out of 100 times. That seems like a better risk because you can go, you're still going to be losing less on, if you go 3 large, you go 1, 2, 4, that is 7 against you. And the other one will be 1, 4, 16. Yeah, it's parabolically much worse. The odds are just much, much worse. I'll type out the odds. Like when you trade with a very, very negative skew and you get blown out on like the second level, you're parabolically much worse on the negative odds. So the whole idea is this really lets you set up your own menu of trades. But the way I like to look at it and the way I want to trade it is I only want to trade the absolute, like in this particular case, if it's even money, I really want to see a +8 or better edge if I'm going to trade it. So that means I'm only going to constrain myself to the first top 2 or top 3 trades. This gives you much, much better granular control and also a higher, degree of expectancy on whether things are going to work for you or not. So like right now, basically, we don't have any setups because the market is very, very flat. But the trades that show the highest probability of success are the pull away trade, which, by the way, like, why was this just a bad entry? Oh, no. What was I trading? Oh, this was we were trading this one, right? I think we're trading this one. It was dot confirm. Yeah, green dot confirm over here, which really is not that good, actually. That's interesting. Okay. So let's just stay on this edge where we have the other thing that I really, really like is so let me just see, green dot, no, 6.5, that's too little. Dot is too bearish. So I'm really only looking for bullish engulfing, pullaways, and red dot trades. Those are the only trades that I want to take. But what I like about this is there are certain hours where this whole chart is red, and those are like the hour itself is not a conducive hour. This seems to be a pretty conducive hour for continuity at these particular odds. So this gives us a really interesting way to split this. So you want this to be small. Well, in the next version, I'll make it user defined, where the users can make the text small or large. I made it large because it's very, very difficult to see for anybody, where I'm demonstrating. But I'll give you that option to define font size, and then you can just define it to like this kind of small size. So any other notes, guys? Give me some notes on whatever functionality you guys want to have, and I'll happy to accommodate. So kind of pretty quiet. Does everybody understand now the basic idea of how cool this is in terms of that you have this whole statistical backup? You can choose the trades you want given the hour, given the P&L structure, and then just play them out as they play out in the market. Right. Yeah. Well, that's hopefully going to be easy for you guys now that I'm going to make everything user configurable. I mean, the gameplay, we had some big moves in London, right? Since London have calmed down a little bit, but we actually did break the 200 level. Markets are clearly very negative skewed. And even though the data is kind of showing us that the bullish setups are the ways to trade, you can sort of say, well, I'm only going to take I want to take just the bearish setups that have the best P&L. So maybe a red dot, like right now, here's a red dot coming up. But I will warn you that these red dot setups are almost always, they're 50-50 setups at this point on a 5-5 basis, which means that it may take you 2 or 3 of these setups to, reconcile the P&L. We'll see. All right, so this is 37 seconds. We're gonna I'm very dubious that even money trades are gonna resolve, but let's give it a shot. Thirteen, 14 seconds. This can't, as long as this candle doesn't break the high, this becomes a red dot trade with a 9% edge in our direction. All right, let's see if this. Yep, and we get clipped out, as I thought we would, because it's basically a 50-50% edge, which is fine. So then the other one that sets up is a pull away trade, right? Let's trade the pull away trade if it comes in. And see, if this was like a 5-10, this would have definitely worked. So I'm curious. I'm gonna trade this small with you guys just to see if the data can reconcile itself, or if it's a little too optimistic, I think, on the resolution. The one great thing about this is such small stops that you literally don't even feel them. There's just like no negative draw at all. All right, let's see what happens next. So this is, if this gives me a green dot, so far it hasn't, but if this gives me a green dot, this is a bullish engulfing. Whoa, what happened here? Nice big pop. 8:30, we have news. Do we have news? Jobless claims 225, forecast 215. Not much. All right, let's see how this trades. This is a bullish engulfing. Has a big spread. Let's see if this actually works. First of all, let's see if it holds. $11 seconds left. Oh, it just, there's no way this is gonna be able to survive a 5-point stop, but that's fine. I'll keep going. Let's see what we can do here. I'll give it one more shot. See, if it was a 5-10, it would have easily resolved. I just don't think he can do even 5-5s. I think it's I'm actually like, let's see what the odds are for a 5-10. That might be a much more reasonable trade to do. Still pretty good odds. We're like, the spread is better, and it certainly would have done both of those trades. So let's get to 5-10. We know that 5-5 isn't going to work. Let's try this. Oops. It sucks. That was just right then and there. I was just, I wanted to get out of the trade. I'm just trying to manage this whole thing. Let's see if it's going to pop myself up. Come on, 83. 83. No. Fuck. Ah, that sucks. I had the trade, just didn't quite make it. All right, we'll try the next one. But we're going to do it with a 510. I'm going to focus on just really pulling the right trades. I'm going to set up the right structures here. I think 510 is kind of the minimum you can give yourself for reasonable breathing space. And given that the edges are all pretty good this hour, let's just try to trade that, see how it goes. Because almost all of them would have worked. Even trying to figure out if this one would have worked. The pull away would not have worked. No. Oh yeah, you want to set up. If you want to figure out how to do the settings, you have to go inside the indicator, and it will tell you. You can set up your own stops and targets over here, and see how that would play itself out. So this is all configurable by the user. All right, bullish engulfing, best setup here. This is yellow on green, bullish engulfing. This is what's setting up right now. Big move. Look at that. All right, the trade. Let's even get an extension here. All right, and that finally confirms the statistical trade, which is exactly what I wanted. All right, so we'll focus on the top two, which is green dot, bullish engulfing, as actually green dot, red dot are all good trades. Actually, all of them are 70% or above. So I mean, that's a pretty good structure. So let's give it a shot. Let's trade this. This is just a pull away trade, and the green dot trade that gets reversed. We'll come back with a little bit of size on the next one to see if we can get it back. See if we can get another bullish engulfing, which was a trade that really worked. My kind of like preference when I trade myself is just to trade one. Like, don't get, there's basically most of these trades are similar versions of each other. And I want to try to trade only the top one, right? So maybe that's what I'm kind of do. I don't want to, I know I love to show off all the different setups, but when I trade myself, I just simply trade one. In this case, like this whole hour, I'm just going to trade the bullish engulfing as a setup, because that's the best one. Let's see if that works. That's not showing it to us right now. The other thing that I want to show you, so this is this 510 is a pretty high ratio, but the other thing that I like is I really like the 20-point stop. Like when I trade myself, I want to give myself a 20-point stop with a reasonable target. So if we go like, let's say 10 target and a 20-point stop over here, I wonder if the data is going to, yeah, it's not that horrible. It definitely eats the edge a little bit. That's interesting. And the bullish engulfing goes to flat, and just the red dot only, just the edges get really smaller. Huh. Really interesting. But what if we do my other favorite? See, yeah, markets are not easy, right? The other interesting thing that you see is that, like the worse, like I'm just saying, like let's just extreme. Like let's go to just for shits and giggles, 525. Just curious to see. The worse the edge, the thinner. Huh. It's not necessarily true. Huh. Wow, look at that. That's an 88 against I thought the spread would be thinner, but it's not. But basically, this tells you is that you just need a lot of room to avoid just what do you call it? To avoid all the volatility. So for argument's sake, let's try this. This is a bullish engulfing. Oops. Oh, damn it. Just ran away. I'm sorry. My execution was horrible because I was trying to set up my structures. So I'm just going to try to trade this with like this crazy 525 just to see how whether we can get to like an 85% win rate and all of these things, especially on the bullish engulfing. Fuck, that was right then and there. I mean, this trade would have been there had I just simply not executed badly. That pisses me off. All right, I think it's probably going to get us there anyways. All right, we'll take it. So that's sort of like an interesting approach. You can do lots and lots of stop outs, but very, very controlled stops with a small edge, or you can do almost pure winners and then occasionally like a really, really big loser. And especially when you sift it like this and you just focus on like an 88% trade, you can get away sometimes, especially during the good hours with almost no losses. And then if you do get a loss because you're trading small, you can, I don't know, I wouldn't necessarily go, 5 times size, but I might go 3 times size, recover much of the loss because your probability of being wrong twice on a 90% trade is literally 1 out of 100. But the key thing here is you have the setup. You have to be absolutely sniper-like focused on making sure that you get it done. Like, for example, this is a pull away setup. I'm gonna play this with you again. Let's see. Hopefully it's gonna work. So it's a very large stop against the setup. And actually, what I want to do to really, really increase my probability. So this looks like it's going to work. Sorry, guys. My dogs are barking. What I was going to say is, if you really, really want to increase your probabilities to around that 85 to 90% on these type of structures, then just trade the first 1 or 2 of the pullaways. Even if, for example, if you traded these 2 pullaways, just to give you an idea, you see how you survived all of the retrace here to come back and win the trade. That's that's like an interesting way of doing the trade in a hyper focused manner, which is the way I like to trade it. You can also do, and this is the other thing, is you can also do completely opposite thing. You can do something like, well, what are the odds during this time for those people that want to trade positive reward? Let's say I want to trade, I don't know, 20. I'm going to do 1 to 2, which is the question is it going to do better than break even? I'll be shocked. But let's say 20. The stop is 10. So we're going the other way around. So there is, the bearish engulfing, the red dots are mildly above break even, right? So this means you're going to lose 2 out of 3 times, but you're going to make money. You're going to lose a little bit less than 2 out of 3 times, but you'll make the money. The other thing is like what happens if we just really, really stress this out? What happens if just for shits and giggles, if I go to 25, there's no way this is going to give me positive results. Not much different. And not much different. Basically, it kind of shows to you that when you hit that 1 out of 3 trades, you can make more money out of it. So basically, if you're trading red dot, bearish engulfing, if there's this time frame, one out of those three trades is going to work for you. And if you like to work that way, where you don't mind losing 2 out of 3 or even 3 out of 4, but eventually you're going to hit those big winners, that's great. If you want to trade the other way, where you just want to trade as consistently as possible, but you don't mind hitting a big loser from time to time, you can just simply go this way, which is a really, really big skew. So it's really, really flexible in terms of how you want to structure it and what your personality type is. So obviously this is much more my type of personality, but I like, basically if the edge is, and you'll notice in both of those, the edge is close to around 5%, which is quite good. Now in the even money trades, there was like, the 5-5 trade or the, actually, I think it was a 10-10 trade. The edges were bigger, but you really, really, really had to be very, very methodical. You're going to go like 5-6 losers in a row, or like 3 or 4 losers in a row. And if you're not in that mindset, you're not gonna want to do it. All right, this is a bullish engulfing. Look at this. So 15, 16 seconds left against this this trade. Let's see if this gives us a play. A big candle. And we're done. So it kind of does show you pretty strong consistency on the trades. Basically, if you just focus on these 2 trades, the bullish and the pull away, you're doing okay. You're doing okay. Also, you see that now we're setting up a pretty strong bullish run. All of the buy blocks are supporting us. So that kind of tells you that the bullish trades are in vogue right now and should be in big support. You can't do a trail, unfortunately. It's not going to, because it's not going to know how to do a trail. Yeah. So, like, what I like to do is, if you sort of focus, the type of trade, like if you want to do a hyper high probability trade, because accuracy is always a function of win rate and everything else. Pick the top one. In this case, it's the bullish engulfing. And if you were to trade that just from the 8 o'clock hour, right? Just from the 8 o'clock hour. Where was it? So let me run you through where the steps were. This is, remember, engulfing always has to have a yellow or a red to start with. So this would be the trade here. This is the bullish engulfing over here. That's 1. This is the bullish engulfing 2. This is the bullish engulfing 3. This is the bullish engulfing 4. So 4 out of 4, right? And in this particular case, the 5th one should probably be a loser, or maybe the 6th one will be a loser. It's probably 5 out of 6 that you're going to get the ratio on. That's how you should be thinking about it. Like, like this was a pretty good run on the trades. And the way I would try to run this particular structure is, let's say, you have like 6 trades in an hour, the sixth one is a loser, just for argument's sake, then the seventh trade becomes like 2 or 3 times the size. Two times the size isn't going to be detrimental to your position at all. But if you can capture 2 back, you're now essentially only -3, not -5 on that one particular structure, and you're net positive. So that sort of like the way the string should go is you go like, just for argument's sake, +5, +5, +5. Let's say +5. Let's say -25, +10, right? And then we're just mildly positive. If you want to go 3, actually, I think you have to go 3, +15. That's the way you would have to do it. You'd have to make the bet. And the reason why you can, you have confidence in this one is because if this is like an 88% bet, something is like, it's actually, yeah, it's 88% bet, right? 88% bet. That means only 12% are going to be negative. And that's 0.12 times 0.12, which is equal to 0.24, right? Let me see. 2 times 0.2. Yeah, no, 1.4 equals to 0.14, which is basically equals to 1.5 times out of 100. So out of 99 sequences, you're not going to get stopped out twice. And if you want to make that bet, then you become net positive. So this is just like, let's say this is just 1 hour's worth of work, right? So this is like an hour's worth of work, and then you can repeat that a couple of hours. If you can just repeat that for 2 or 3 hours, you're basically netting. What are you netting? You're netting 10 points an hour. Obviously, depending on how big the size of the 10 points is. 3 hours, you got 30 points, right? You're in good shape. If you're trading like obviously, if you're trading like 1 micro, that's not going to be well, that's only $60 that day, which is very small but very consistent. But if you do 2 micros, that's 120 in a day. That's exactly where you want to be, and that assumes that you're going to hit that. You're going to hit that negative. Remember, like the other thing is that if you're trading $20 a trade, right? It's very conceivable you can hit 5 trades in a row, and then you stop. So that account just simply doesn't hit any negative trades, right? There's 2 things that you're working with: hitting negative trades because whatever the next hour is terrible, and getting the account to plus 100 every single day, so that you could you could get it effectively to a funded position in 15 straight days. It's kind of how you want to run it. Just the whole idea is to kind of run all of this in a very, very controlled fashion. Okay, a little bit quiet. 9 o'clock hour. We had a big sell-off. We came back up. This is going to roll over to the 9 o'clock hour. It's going to tell us a completely different set of possibilities, and we can switch over then. But if you were just trading the bullish engulfing this whole hour, you had 4 consecutive winners. That's it. Like, you just basically had, if you had the top structure, you had 4 consecutive winners. If you were trading the pull away, this is another interesting thing. So you could you could sort of back test the pull away, right? This is actually the 7 o'clock hour, but let's say if I counted this still would have made money. So this actually would have been five bullish engulfings. But if you traded the pull away, right? This fails. I believe this fails. This is 80. The high over here is 83. It fails, right? So this fails. This succeeds. I guess you have to ignore this one. So this succeeds this one. So it's 1-1, 2-1, 3-1. You don't count this one because it goes right through it, and 4-1 because it goes right through this one. So this would be, you can't like, I don't count, like you made the trade into a pull away. That's not a, you don't want to start the trade off that pull away. So this one goes what, 24. Yeah, this one totally counts. So in this particular case, you had 4-1, right? 4-1 on the pullaways. The pullaways would be net negative a little bit if you didn't increase size. If you just simply traded the whole thing, the bullishes were all positive. So let's just, for argument's sake, you didn't want to do any size at all. You didn't want to do any size at all. If you were trading it this way, you actually, if you think about this, this is actually like really interesting. You had one loser, you had 9 winners, right? You were net positive 4, just without any risk whatsoever, no additional risk whatsoever. That's actually pretty damn good. And if you sort of take that approach, I'm just gonna trade them per trade. Think about like how much edge you have at that point. If you were 9 positive, 1 negative, and you were just trading, well, I don't know. I'm trying to think of like what's the max you want to give yourself. Even if you're trading, well, even if you're trading $40 trades, you're trading 4 units. Times 4, that's 160. 40 times net 4, it's, you get 160 in this 1 hour off of very, very small drawdown. That's actually really, really good way of thinking about it. Yeah. I can't predict. I don't think anybody can predict direction. I see guys I see lots of gurus trying to predict direction, and they tend to always get stopped out. I'm trying not to get stopped out. That's my whole job. Oh, look at this 9 o'clock hour. Really interesting. Complete sort of reset of the structure. Green dot and the red dot are the dominant trades. Okay, so let's play this. We're going to play this. We have a red dot. I actually sort of, we had a red dot over here. I know this was a transitional one. So now green dot, red dot are the 2 dominant setups that we want to trade this hour. Right? This is really cool. That means we get to just sort of switch setups on the hour. I really like this. Let's do this. Let's have fun. Okay, so red dot, this one, if this one doesn't invalidate the highs, we take it. We take it. If it does, we just wait for another setup. So the highs at this point are 1275. All right, short this. See if we can make the 5. So here we're getting a contradictory signal to the one we have, right? It's an interesting dilemma. If it shows up, my instinct is to just simply blow out. I don't need to take the thing. But another possibility, and we can certainly do it, is just simply go into the other account. Listen, I haven't even traded this account. This is a new account. We can kind of start that fresh and see if we can trade that account, which is what I'm going to try and do if I get the signal. But actually, I don't. I'm sorry. While I was flipping around, this account got done. We made this positively, guys. So, well, sorry, which account was 72? I'm sorry, I'm confused. Here, let me show you. Let me show you on the charts. All right, let me kind of keep it focused. Here, trading, execution marks. Boom. See, we got short here. It got totally resolved, right? Okay, cool. Cool. Let's keep it simple. Let's just stay with, oops, shit. Let's just stay with the setups, and we'll take it from there. Another red dot setup. This has got about 3 seconds left. We're going to take it. Ah, shit. I'm in the, which account am I in? I'm in the 73 account. Sorry, guys. I'm like, sorry. I'm in the wrong account. All right, let's see. We'll stay in this account. Let's just have fun with this account. I hate switching accounts. It's the only thing I hate about Tradingview thing. When the wealth charts is so much easier to switch accounts. All right, it's a brand new account. Let's run this one. So what is this setup? This is red dot. The next candle does not invalidate the high, so we're shorting it. It also happens to be, this particular happens to be a pull away trade, which is also a pretty high probability trade according to the data. I'm going to take myself out of it. I don't like this trade mainly because it tested the lows, didn't quite come down. I'm not gonna. I don't want to have it run against me because I feel like this is pre-New York jumpiness. So I'll interfere with the setup. Just close it out a little bit early. Wait for the next one. We're gonna just wait for the green dot, red dot setups. Those are the best ones. This is a green dot setup. See, this is the other thing is when you're trading this kind of a situation, sometimes you get a reversal setup right then and there. I should have just simply watched it. This is a mistake on my part. All right, we get another green dot setup right now. So this is a red dot setup followed by a green dot setup. The very nature, the very essence of the fact that this is a green dot setup tells me that I should have reversed. Had I reversed, this would have been a nice clean trade the other way. So we'll get more comfortable reading the price action and go from there. Okay, so here's a green dot setup. Oh, no. You know what? Guys, I'm like all over the place. I'm sorry. This was the red dot setup. This did not break the highs. This now becomes a green dot setup. It just kind of invalidates it. It should just be an invalidation of the setup. This one breaks the lows, so not a trade at all. This one, if it doesn't break the lows, this becomes a green dot setup. Gotta sort of stay consistent to my own rules. So if I'm going to trade and the trade kind of, the whole essence of continuity trades, you're not supposed to break the highs, right? This kind of broke the highs. So you're already problematic, but it didn't just break the highs. It became a green dot setup. I should have invalidated it right then and there, which is fine. Here we go. So the other thought I have, because you have such small, you have small targets, wide stops, and the whole idea is that the wide stops survive the volatility and eventually bring you to profit. That the only like fully accurate way to trade all of this would be if you're trading green dot, red dot, which are by very definition opposite setups. Is like if you would do this in wealth charts, you just trade two separate accounts. One is green dot only that hour. The other one is red dot only that hour. Because if you're trading, if we're trading this red dot setup, I would still be alive in this one, and I would still be alive in this one. But now I'm kind of getting myself chopped out on both sides because I am unable to. These are two completely contradictory setups, and I should be trading them both. So I think we're gonna try and just simply move over to wealth charts because I can't trade these setups in here. Oh God, come on. In here with ease. So we can take the signals and just trade the setups in here, and that should be perfectly fine. So here's a red setup. I'm going to sell this. The other great thing about this is that say, ooh, did I have big size? No. Oh, this is a 10.5. Okay. Oh, two. What is this? Oh, I'm in gold. Oh, fuck. Cancel all. Wait, flatten. I'm in gold. I forgot I was in gold. NQ. Okay. All right, let's sell this. Wealth Charts is a so much easier a platform to work with. So what we'll do is we'll take the long setups in TradingView, the short setups in Wealth Charts. So I think Wealth Charts, I thought that resolved. Maybe it didn't. And that way we can run both accounts. Well, the problem is if you're closing it out, Michael, remember the whole idea of this particular setup is it's supposed to absorb all of the, it absorbs churn, right? If you're going back and forth, what it means is that you're just basically in churn and you're losing money. It's false breakout. Because this is a wide stop, is going to try to survive all these false breakouts and complete at very minimum on one side, but it will at best may complete on both sides. But you got to give it that breathing room to complete, to give it that 90% success rate, right? So that's the whole essence of how you run this in a proper sequence. That's why I only run it with 2 accounts. One account's got to be taking the sell signals. The other account's got to be taking the buy signals. Otherwise, you stop yourself out, comes back up, stop yourself out. It's going to give you lots and lots of false signals, and you're just getting, you're getting clipped out. So here you're on the long, still off of here. That's been like a 6 or 7 minute resolution because the market's just kind of died. And here you're in a short off of here, trying to see if that short is going to resolve too. So that's the only way to do that when you have when the 2 top are absolutely contradictory, is you just do that. So it looks like the long is going to get resolved. And you see long gets resolved because you are, oh, come on, let's go already. I speak too soon. I can't believe this. Just missed the target, huh? What was the target? Oh man, that's annoying. 7. What was the high on this? Ooh, missed it by 1/4 of a point. Missed it by 1/4 of a point. That's really annoying. Oops, sorry, what did I just do? I'm going to exit out of this position because I just want to get a nice, clean, fresh read on everything, and we'll go from there. Because I think now I finally, if I figured out where my, what the problems could be if you have this type of structure where you have lots and lots of opposite side trades that could be triggering inside of it. What's the target here? 94. So as you can see, this is brutal for any other, strategy where you're like following it, because it's just chop. This is a beautiful, beautiful move, and this is very, very true of all, what we see every day. We have these beautiful moves, we capitalize on the move, and then you have just complete churn. One of the advantages of these kind of strategies is that you're just wide enough to survive most of the churn, and you obviously it's very, very easy for you to capitalize on the beautiful moves, that's the whole, in a perfect world, if you can survive one, capitalize on the other, that's where you're net positive to the whole thing. Uh, 13 minutes to the open, guys. super flat. Pull away is almost as good as the green dot, but we're going to just simply trade the green dot, red dot as the only two structures. So let's see what it wants to do. The green dot structure makes us wait for this particular candle and make sure that the candle does not break the lows, and then we can trade it. Or like sort of the easiest way to segregate this type of structure is to say one account is long only, one account is short only. So it means it only takes long only directions, which in this case would have taken the pullaways or the buys. Let's see. Okay. All right, done on the green dot. We are 8 minutes away from the open. So we're sort of counting, like doing an honest count from the 8 o'clock structure. What do we have? We have the green. This green dot got done. This green dot got done. So you got 2 minus 1. So you had like 11 to 2, basically. I'm counting just, winners against losers on the structure. 11 to 2. You were just taking only the top trades in both hours, because this short got stopped. Obviously, this short candle short got stopped. Red dot got stopped. Okay. 5 minutes to the open. Next trade would be a green dot trade right in front of the open, which I don't love doing. So maybe we'll skip it. But like, it's a legit trade. Unless this gets invalidated. Five minutes to go. The other trade I really love doing, the pull away trade because it's such a pure essence of momentum. And I'm just looking like, because I remember the pull away was good, in the other hour as well. If you just traded the pull away on all of this, there was only one true miss. It was over here. Yeah, basically. What's the? I'm just curious. What was the true pull away trade in? Oops, sorry. I want to 7 o'clock hour. Just curious. Six o'clock hour. Pull away had very, very thin range. Okay, 7 o'clock hour. Still a pretty thin range. Honestly, what's interesting is I'm looking through. You look through all these hours. It's really, when you look through all of this movement, it's basically. I'm trying to see like which setups change, which setups stay most consistent. That's interesting. I still think we're going to have a pretty negative open. Markets really, really, I think fundamentally are structured negative here. So we got 2 minutes to the open. If you traded the red dot over here, this trade over here would have been fine. You would have been totally in it. I just don't want to stand in front of the 2 minutes before the open for the rip and dip. But actually, all of these trades would have been fine. You could have totally done them. Okay, 1 minute to the open. It's going to be a lot of volatility, so we'll keep an eye on what we can do. $9.30. Let's see what happens. Big dip to that 30,200. Not a surprise. I was like, this is like a perfect, by the way, perfect opening candle. Like if you want to just do size on the open and you have a skew, this would have easily, what are we in? 67. This gets funded in one trade. I should have actually just really done that. One of these days, we're going to just do a opening candle. Let's get funded account. Just one trade structure. I love that. Okay. So basically, oh man, sorry guys. I'm sorry. I got all confused. I need to save this. It's for some reason my well charts are saving into gold. So I got waylaid with all this stuff. All right, we're gonna give it ourselves the first 5 minutes to let the volatility shake itself out, and then we'll try to figure out what we want to do. Obviously, here's the short red dot got invalidated on this one. So now we don't have any setups until, and I think the game plan is always like the first 3 minutes, let it shake itself out before it sets up the setups. Okay, I think I saved my well charts properly so I can configure them the right way. By the way, notice that the data updates dynamically all the way throughout. And also, like the other thing is, what this basically shows you is that almost every setup is going to work, right? And okay, so we're getting this is a bullish engulfing, which is right over here. Really, really big here. $32 seconds left. So what I was going to say is, you could just simply say, you know what? Almost every setup works. I'm just going to take whatever is the next setup as a structure too. because generally, this is all approximation. You're not going to, it's not a guarantee that this is going to be, you're going to land it. It just tells you this is a pretty good continuity hour for the kind of things that you want to do for this type of structure that you want to do. 6 seconds left. Let's, oops, I'm on the wrong one. Yeah. Lots of vol against me. Lots of vol. This is a huge vol candle. So I could be right and could be wrong on this thing anyways, but no, I got it done. So this was just basically me stepping into a massive vol candle and trying to see if I get lucky on the vol, but I did. So fine. This candle is almost breaking the low here, but not quite. And if it holds, that gives us a green dot trade. Let's see if it can hold. Nope, doesn't hold. So we reverse. We're between a buy block and a sell block. Lots of vol. It's honestly, I got to tell you, it's really hard to gauge the actual sentiment of the market. Because you could make an argument that, yeah, things are really due for a correction, but it's just so stubbornly bullish. See if we can get a bullish engulfing here. 16, 17 seconds left. Pull away, bullish engulfing. See if this is going to play out for us. Coming right back down. Vol. Look at that vol. Wow, it's a vol mass. But we still managed to survive it because we have that huge buffer. Wow, that's crazy, man. The vol just really rocks you. But we took it. It resolved just like the data said it would. Yeah, right at the VWAP. You're right. Coming up at the VWAP. I wonder, like I'm just like riffing, just saying to myself, like, when we do the funded strategies, we like to do them against news. I bet you we could do a funded strategy against the first candle of the open almost every other day. Because if you think about it, what does it take to do a funded strategy? You need a uniformly moving trade, and it almost always moves 50, 60 points in one direction. So, if you have a vibe on how it goes, you're almost guaranteed to hit that target on just a, two NASDAQ with a 35-point target. All right, who's going to think that we're gonna test the London lows? Oh, actually, I got to reset. This is I need to set the time. This says East Coast time. You got to set it to Chicago time. So this is London lows here. London highs way up here. First red dot. All right, let's play the red dot over here on this account. Ooh, man, look at this move. Ten seconds left for the candle. Oh, it's the wrong stop. It's the wrong stop. Fuck. Come on. Done. There we go. They got done. It's still the wrong stop on this thing. Ugh. I have to do my savings. Yeah. Okay. So the red candle gets done. Red dot gets done. I'm sorry. So another way I think, like, to not get crazy, right, and maybe limit your trade sequences so that you get really, really the highest probability trade sequences, is you could just simply say, I'm going to take the first given signal within the slice, right? So the first given signal within slice, like, for example, pull away, first given signal here, red dot basically is it's actually the same one. This one and this one, they're both the same signal. And then you just pause and not take any more, because you know that the more you take, the greater the probability of the reversal. And maybe just take like the first signal that shows up. So like right now, the only thing you'd be looking for would be a bullish reversal, right? Because that's positive as a trade. One of the things that I realize is that so many of these setups are duplicatory to each other. So like if you go to dot confirm, purple to red, this is also the red dot signal. This is also the pull away signal. Like there's like 3 or 4 different structures that all intersect. And if you just took like the first move, this limits you from running too many trades and just getting out of control. But it does limit our trading too. It basically limits it to the to the slope sequence, which is not a bad idea, because basically slope sequences change every 15-20 minutes. So if you take one trade every 10-15 minutes, you'd probably be better off than taking 5-6 trades every 10 minutes, and then just you get yourself into a total vortex. I mean, like right now, this is all negative. Yes, I absolutely thought it was going to be negative, and you could just simply sell this on a thing. But this is a different mindset. This is, if you're like in a mindset of like, I just want to sell trends, then you should just only say, I'm only going to trade pullaways, right? Because really, what is a trend but just a bunch of pullaways, right? So if I'm super bearish and I'm super bullish, I want to trade pullaways. I'm going to trade every pullaway until I hit a stop, right? This is all pullaways till you hit a stop. This is all pullaways till you hit a stop. You could definitely do that, but I think it's a different mindset than just saying I'm going to trade, one setup per slope swing. So I'm not going to get too worked up into each and every setup. We should do what, astrology? Just like subdivide our structures and just say, I'm going to trade pullaways. As long as they're kind of net positive, I'm just going to trade pullaways in one account. And in the other account, I'm going to trade, slope switches as trade setups that are on slope switches. So I'm only going to get the first or the second, the highest probability structure. Might be a good idea. It's just a good way, to either naturally pause yourself or to go crazy in one single account and just simply trade trend. Because these are like very different concepts. And I think when we mix and match them into like 6 or 7 different strategies, you get destabilized because, 1 out of the 6 doesn't go your way, and then you just go crazy with everything else. You guys agree? I think it's definitely true, both like psychologically and physically and financially, and how we do this. We should do it. We should do like I have lots of different accounts. We should definitely try it in one account. We just simply, you sell the pull away on these big large moves, or buy the pull away. That's your trend account, and the other ones you just trade the setups on a slope change. Yeah, that way it definitely does keep it simple, because you're not polluting 100 different setups with one single idea. Good morning, Bella. How are you? We're watching paint dry right now because All the price action happened about 10 minutes ago. We got nothing to do right now. No signals. All right, so here we go. Slope change. Pull away may be in play. And if that's the case, I can easily do it, and we can switch over to let's just take the swell charts. And just try and trade this one on a pull away basis. Make sure that I'm right on this. Yeah. Okay. Red dot in play. It's actually bearish engulfing. By the way, that's the only one that's actually negative. So, although I'm almost certain this is going to work. I always say this, and then I always test it out, and it almost always never does. But it's really, really funny. All right, I'm gonna trade the data setup, not what I think is right. So. But I bet you this bearish engulf, because this is such a negative day today, it's absolutely going to work. All right, we're going to trade the red dot setup in this one. $16 seconds left. There we go. That got done. I listened to my data, although the bearish setup would have also worked. Fine. Oops, you know what? I have too many. Here we go. Let's do this. All right, switching back to a green slope, maybe a green dot setup over here. And if this starts printing neon greens, if it starts printing pullaways, we'll just go into pullaway mode. Sorry, this is also bullish engulfing. It's also pretty legit setup too. So 4, 5, 7, 6. Let's see. Oh, that was super fast. That was in and out. I was literally in and out before I could even tell you. So that was popped. It popped up right here on the chart. Here, I'll show you. I was so fast that I couldn't even do it. Oh, I wonder why it's not showing me. So 73. Why is this not showing? Huh. Oh, there it is. This is finally popped up. There it is. Boom, boom. It showed up. Sorry. That was super fast. All right, nothing much going on here. Really ranging this morning, right? It's basically the New York box haven't broken the London, although really feels like they want to run the London lows. I think they're going to run the 30,000. But what do I know? Again, we don't try to predict, but it feels to me like they want to run the 30,000. Who thinks they're going to run 30,000? Yes, no. Should we do a little poll? Kind of quiet. Let's do a little poll. There we go. Let's do a little voting. Tell me if we're going to be running it. Keith, do you like the way I redid the chart? This is ranked by edge, but tell me if you like the way I did it by group. Was that good? Let me know. This was Keith's suggestion to color code the groups. It's easier to read. Yeah. Well, that's exactly it. That's what I did. But I spent all my time on the edge one, not on the group one. It's up to you how you want to do it. I like the edge because I wanted ranked by. It just gives me a better idea of what the structures are. All right, negative slope. We're just kind of like, man, let's have zero price action today, huh? We're taking quick scalps and doing nothing else. Green dot showing up a little bit, actually. You know what's showing up? Actually, this is a bullish engulfing right here. 25 seconds left. This candle stays in place. We're going to go long. It's a big move here. Big move. It was right there. Right there. Don't do me dirty. Right there. Come on. There we go. Thank you. That was done. Okay. So here's what I'm going to do. I'm not going to go. This is going to be the non-crazy structure. And now I'm going to open up a new account. I'm going to trade the different account that's going to be in crazy structure. The crazy structure being where we take continuous signals in our direction. And the only continuous signals I really want to take always are the pull away trades. So pull away trade is net positive. I'm going to take this in a totally separate account. If I have 3, 4, 5 of them, great. If I have one of them, fine. But we had a slope switch. Oh, look at that. Pull away goes away. I got all excited and nothing happened. We had a slope switch. We had the, let's call it the green signal, whatever signal it is within the strategy, the green continuation signal. It's really, every one of these strategies, it can be divided into long continuation signal, short continuation signal, right? It's really, really kind of very simple. So we take the first one that fits the criteria and then stop and just don't fucking go crazy with the trade. And if we want to go crazy, we just trade the pullaways. That separates us from doing lots and lots of even presumably good setups that can trip us up, but also exposes us to a trend running structure whenever it happens. I think that's the best way to read all of these signals, or at least that's the way I'm gonna try and trade it with you guys. So I get the best of both worlds. I creep the accounts up on very selected sniper-like structures, and then I go crazy when I get the neon signals. What do you guys think about that? What do you think of that as a trading plan for us to, have both things play out in the accounts? You guys agree? Yeah. All right, now let's see if we're going to get some pull away moves. I'll figure out which account I want to go. I think I said I want to trade this one for the pull aways, right? Let's put this one for the pull aways. Man, we are really, really choppy. Nothing going on here. That's actually, by the way, that's the other cool thing is the very essence that we don't have any pullaways is telling us that the market just doing dick all, right? Like the very fact that, this whole last 20 minutes, if you think about this, last 20 minutes have been a 60, 70 point range is nothing. And now we're finally, maybe if this pull away holds, finally starting to maybe, extend the range, come back, test the New York lows. The very fact that we don't have neon candles is the signal that we should be doing nothing, right? Like we're really just sort of very, very simple in terms of reading this stuff. I'm going to trade wealth charts off screen, guys, and then I'll bring it in just because it's much easier for me to do it this way. And then I'll bring it in. I don't want to switch tabs because it's such a pain in the ass execution wise. All right, sell market. I'm in the trade and I'm out of the trade. Sorry, that's just the way it works. I can't, here I'll show you. I was in the trade, out of trade. I told you I was gonna. Sorry, this is the account. I got to trade off screen on these things because they're super fast. Wait, what the fuck happened here? Oh, it's micros. Micro, this account. Wait, what happened? Which account did I trade? That's correct. What? Oh my God. Oh my God. You know what I just did, guys? Not paying attention. Holy shit. Look at this. That was supposed to be a $40 trade. I did not realize I was on the minis. Okay, goes into the I better be lucky than good. $500 trade with just me not even trying. All right, that was nice but stupid, but I'll take it. All right, fine, that's good. So now I'm on the I just want to make sure I'm on the micros, not the minis. Why am I on? Why I'm keep hitting the mini? This sets up as a mini. Why is it setting up as a mini? Is there? Look at this bug. This is no micro. This is the micro. Okay, I'm in the micros. Oh shit. Anyways, pull away trades. More pull away trades here. Let's look around. Okay. 14 seconds. I'm going to try and trade this pull away trade. Let's make sure I get this right. No. Sorry. I may not be able to trade this. Let's see. So. Am I going to get it? Yes. Come on, come on, come on. Exit out. Nice. Okay. Look at that. 2 trades, $500 just because I got freaking lucky. I love it. Okay. Okay. Third pull away trade, testing London lows. We're going to press it again if it stays in the game. 3 pull aways and then we pause if we can get the move. That was nice. After all the execution fuck ups, it's nice to have a thing go your way. All right, same idea. Pull away. Done. Done and done and done. Okay, so 3 in a row, and it's pretty good. You can, max pull aways would be 5, but at least 3 in a row. This just kind of shows you here we can kill the trend with our structure, and then come back, relax, wait for the next slope change for the other setups. I think that's a much better way of trading. For sure, it's a much better way of trading right now, having pulled away this on just pure lucky moves. That was very, very nice and lucky. Cool. All right, I guess we can kill the poll. 86% think we're going to test 30,000. I think we are going to test 30,000. And there's 4 more, right? So that's actually perfect. Like this is so perfect in helping us figure out what to trade. The slopes, we just kill them. Rest of the setups, we do one per slope change, and that keeps us on the right side of trade pretty much most of the time. What do you guys think? Yeah, London lows, exactly. Are you buying London lows here? So this is where it gets interesting. So we have London lows. Obviously, if we hold it, it's going to formulate possibly a bullish reversal. And if it does, that's a reversal trade for us to take, right? But for now, we're able to actually hit 3 consecutive trend trades off the neons, just like we would have been able to hit it here, just like we would have been able to hit it here if we just sort of focused on the structure, right? It's pretty cool. I'm really excited. I'm really excited about doing it this way because then it just keeps us in the game, but at the same time doesn't, flip us around into 100 different setups every 5 minutes. It's very, very defined. What do you guys think? You agree? London bounce once again. Yes. Astrology, did you buy that one? Did you buy the bounce? Good for you. How do you what do you do on the bounce? Like, how do you set the stop? And where do you go in? Are you looking for no new lows? Like, where's your entry? I'm actually really curious. Guide me through it. Like, where did you come in? Did you come in on this candle? Did you come in on this candle? Um, do you wait for some sort of a bottoming before you come in? Do you just kind of guess, I'm going to just buy the low with a certain amount of stop, and if it survives the stop, I'm going to bounce back? Love to know. Retest of the low. So you make a low, you know where they are. Are you looking for a bounce, or you just simply say, okay, this I'm just gonna, they bounce it back up. You just have a bid over here. Where's your stop? Do you have like a 20-point stop? Oh, so here we go. Here comes the bullish reversal trade, right? Bullish reversal trade after the tested along the lows. Let's see if this holds. Now we're going to actually. All right, let's see if this holds. I just entered a little too early. Let's see if it can make this play. There we go. The bullish reversal works like a charm. Now, I wonder what. I want to figure out what account I want to do this in. Maybe I want to do this in the 71 account. Let's do this in the 71 account. Maybe we do it in the 72 account. Let's do it in the 72 account. So this account is going to be my my pull away account. So we reversed the thing. Now if we get pull away trades, I'm going to just trade pull away trades in this account and go crazy. Yeah, with that kind of volatility, it's over 70% one at a time, and you have a 20 point stop. Yeah. Do you like, when do you exit? Do you have a fixed exit, or do you kind of just watch it bounce and then, because the bounces must be vicious. You get like 30, 40 points worth of bounce, right? It's a pretty good asymmetrical trade, right? It's a really, really interesting asymmetrical trade. what did you TP at, Ben? Let's like assume you had a 20-point stop. Like what did you TP on that trade on? Everybody, we're all talking about what's called the London bounce trade, which is what a lot of guys in the room trade right over here. You see, this is London lows, pierces London lows, holds, comes back here. I mean, the natural way is to say is, look, it hasn't broken, hasn't made fresh lows, has not made a dot. I guess like the way I would interpret it within the dot structure is, okay, we make all these dots because obviously making fresh lows. We stop making a dot. That's your natural stop, and you try to trade against that. And if you really had balls, you trade from this candle to the dot. Oh, we're getting a pull away candle. Oh, nope, it went away. I was getting all excited to do pull away trades. All right, maybe we do have one. Hold on. We're in the 72s. Okay. Oops. Ah! Shit, I'm sorry, guys. I'm not focused. All right. The trade got done anyways. So 10 TPs on, you could go for more. I mean, like, think about this. It's kind of an interesting idea. Let's say do small size, right? We do small size. I don't know, a couple of micros, whatever. London close or London lows, right? Stops making the dot, which means obviously, stops making fresh lows. You're in at the natural close. And if you, like I said, if you have real balls, you wait for the buy dot to exit. That's really takes a lot of balls. But if you're in here, 66, that's 100-point move. Holy shit, is that a big move? I mean, you don't get that every day, but even if you get that 1 out of 5 days, you get a massive move. And you probably do it the other way too, right? So like the other way is, okay, dots up to the upside. We stop making dots. That's our natural stop. Try to make it, to the first red dot. Kind of interesting. I'm just curious. Let's. We're almost wrapped. Guys, I'm sorry. I missed one more. It's actually pretty good. No, fuck it. I missed this trade. So I took this trade. I missed this trade. We'll take some more later. But I think we really got the structure. I'm so excited. We really got the structure of how we want to do this. When it goes into trend beast mode, we just trade pullaways. When it everywhere else, we just look for the highest probability setups and trade them once per slope. And that way we don't get crazy, and we don't overtrade. That's the main thing. One of the things I found myself is I was overtrading like a motherfucker on these setups because there's just so many. It's like all you can eat buffet. You don't know when to stop. So I think that's the whole point. We gotta finish up the buffet. By the way, speaking of the all you can eat buffet, who is a fan of the Golden Corral? Who's a fan of the Golden Corral? Give me a +1 on that. That's how you know you are truly, truly American. Are you a fan of the Golden Corral? Come on, I know there's a little white trash inside all of us. You like it. Ben says +1. Yeah, that's cool. That's really, really cool, astrologer. I love it. I love that whole structured setup. What's amazing, Keith? Astrologers, London low, London high setups. Carlos. Ben is the only one that likes Golden Corral. Come on, you bastards. It's like the greatest thing about the Golden Corral, and this is like what you know how like everybody always crowds around. is the fried chicken. I'm sorry, that is the bomb. For whatever it is, like $25 all you can eat. That is the bomb. Taking the dots on what, Keith? Sorry. Oh, see, there's just like, yeah. I knew there were Golden Corral lovers here. You're on 50% limit for Lucid for 2 account just on tonight. Sorry, you made 50% of your target on 2 accounts for Lucid just trading with us tonight, is what you're saying, Keith, in plain English. In the strong slope, you take all the dots. Well, but here's the cool thing. Like, you don't even have to take all the dots. Like the neons, to me, the neons are the money trades, right? And coloring, like I love the new coloring schema because it's just intuitively easy to understand trend in the new color schema. Because it's, trend is, you're always going to get them bunched together. Neons are going to go together on both the upside and the downside as trends come in. Like this is such a beautiful schema to understand what's going on. Like right now, we're getting neon pull away if it comes in, right? This might be like my last trade today with you guys. I gotta run because Kay is gonna fucking kill me. Buffets died in the pandemic. Vegas is killing buffets. Yeah, that really sucks. I gotta tell you. Like, what is your last question of the day? Favorite Vegas buffet. Let's just see how we know who knows their Vegasology. Best Vegas buffet. Put your votes down. Let's go. Oh, I gotta. Oh shit! I'm talking and I'm not trading. Fuck. All right, got that done. I took that trade. All right, beautiful. That was clean. That was a clean machine. Lucid eval, you have a 50% consistency. If you overtrade, you increase your account target. Yeah. Oh, AYC at the Palms. That's very, very obscure reference there, Ben. But I may give it to you because that is actually a very obscure reference. Now, like if you're just sort of straight up regular, look at this, AYC buffets. If you're just a straight up regular Vegas visitor, there's no better buffet than Wynn. I'm sorry, Wynn is the best. And then Caesars would be the second best, in my opinion. But if you like the little boutiques, the Cosmopolitan buffet, too bougie, sucks value. Wynn just, is the bomb. Buccanal is pretty good. Yeah, definitely. It's pretty insane. But Wynn is just very, very classy. It's pricey, yeah. It's definitely pricey. But, I saw people there who were sitting next to a couple. They were sitting there for 4 freaking hours. The guy was like from Omaha or somewhere. And I definitely the hotel lost money on them. Jesus Christ. They were just like, it was like doing reps. They were just eating, pausing. MGM is closing all the buffets. I know, man. Vegas really sucks. Vegas sucks balls these days. It's no like, everything gets corporate. Everything becomes like the times when they used to give everything away sucks balls. Guys, I am watching. What am I watching here? I'm not watching anything. I have a green dot trade that I'm going to pass up on right now. But if I have a pull away trade here, if we have a buy block pull away trade, I'll trade that. Let's just see if it plays up. See if we get another pull away here move. Nope. All right, I got to wrap it up, man. As much fun as it was today, I got to wrap it up because I got to go. Kay's going to yell at me. Tomorrow, NFP Live. I'm going to post it. She's going to post it up pretty soon. Sam is going to come with us. It's going to be really, really fun because I'm going to have Sam trade with my dots against his delta volume. Shit, we got to take this trade, right? Pull away trade, pull away trade, pull away trade. Come, baby. Oops. All right, we're in the trade. Let's see if it's going to pull away for us. So anyways, Sam's going to be in tomorrow. Come hang out with us. 8 o'clock start, okay? Very, very excited. We'll trade the NFPs. Hopefully there'll be price action after the NFPs. We'll have a good time, all right? Everybody, guys, everybody enjoy. I don't know what account am I making? Oh, I'm in the wrong fucking account. I'm like, how do I not see these trades getting resolved? It's because I'm in the wrong fucking account. Oh, Jesus Christ. Okay. Well, anyways, I made money in the other account. You guys are like wondering where are the trades? Because they're all the fuck here. They're all over here. Because of course I'm doing a million different things, so I'm not paying any attention. All the pull away trades were all over here. All over here. Okay. Whichever it was, money in the bank. This is account I just started running. So great. Almost $100 with just very little effort, all on pull away trades. Awesome. All right, guys. Hasta la vista till tomorrow. Thank you so much. Coaching tonight for those guys that are coming in. I'll put the coaching out link very, very soon. Thank you so much, guys. It was really, really a lot of fun today. I'll see you guys a little bit later. Bye-bye.